Hello, everybody. Welcome to the show. Second one today, and the week out on Bitcoin was hilarious. But we're here for another topic today. We're talking about Tesla, and this is the weirdest thing. That sometimes things just bug me and they keep me awake at night, and I try to figure out why are things the way they are. This is one of the most special companies ever. Late 2022. Early 2023 with the best buying opportunity ever. Literally, that was the looking down the back of the seat of the couch for coins to buy Bitcoin. And let me see, did I go live yet? Yeah, good. Just making sure. Wasn't sure. Anyway, here we are again. This company continues to share the most mind-blowing news, and yet the price is not where it should be. And we're going to break all that down and try to figure out why. I think I cracked the code. So thank you all for joining. Let's go. And quick disclaimer, none of this is financial advice. And shout out to everybody on Patreon as well who make everything possible. We are Two Bears says, props for the great content. Happy to support you to the Patreon. Thank you for being here. And thank you for enjoying all it has to offer. And there's always tons to learn every day. Now, literally, inspiration for this is chatting with a lot of people all the time. And they sometimes don't understand my excitement when the price of Tesla falls. That's the way my brain works. It's like, wow, we get to buy something really good, really cheap. That's what investing is. But people are like, why is it not at 400? It's like, dude, we could buy it at 175 like a couple of weeks ago. It was amazing. And I was talking to Frau Merz. This is Tesla Boomer Mama. Literally only an hour ago. And we're going back and forth. I told her I bought a little bit today, actually a pretty big chunk. And that's the third buy under 200. And she's saying, oh, I hope the price stays low because I want to buy more. But sometimes people don't have the exact cash flow coming in all the time. So that was super interesting. So shout out to Alexandra Merz. So let's get into what this is all about. And we try to break it all down. It is a company that has been on my mind since 2017 in a big way, but they've had exponential growth in recent years. They are the only force in the EV market, maybe BYD too, but no, BYD don't have the technology they have or the manufacturing prowess. They hammer the cars together with bodies, not with machines and robots. They also are a symbol of massive technological disruption. Everything Elon touches, he disrupts. That's just the way it works. And Tesla's success reflects its strategic positioning. This is very important. In the forefront of sustainable everything. It's not just transportation. It's now everything. AI, the robot on wheels, which is the car, the bot, energy storage. Chatting with Kiwi Robin today. It's like, what about mini nuclear reactors? And I was saying, no, we have a reactor in the sky. The whole world has access to it. The key is just to store that energy and distribute it. That's it. So that's what they do. And the puzzle of Tesla's stock price is really, do they want to keep the stock prices down? I always ask myself these questions. Are they avoiding giving the analysts the financial guidance they want, which is vexing them? And there's confusion among investors due to the very unconventional Tesla approach. If you think Tesla is going to be conventional, it's not. It's just not how they operate. And you got very compressed margins and lost earnings. When unrealized revenue is at all-time high, it's like, it doesn't make sense. It's as if, my paranoid mind probably they want to keep the price down. So let's dig into what this is all about. Hello, Shark Lover. What a cool name. Let's look at some key metrics as well of where we actually are. And it's pretty obscene to see. All-time high is $414. I bought some under 200 today. And all-time high $414 was over 3 years ago. 52-week high, $300. 52-week low, $152. By the way, it was 106 at the beginning of the year 2023. 200-day moving average, $234.44. 50-day, $214. Like, if in this era of AI, we're under the 200-day moving average by $35, it's kind of nuts. Market cap, 600 billion, give or take, and 3 billion shares. What's going on? If you go back 3 years and look at where we are today, and all they have done. It's crazy. Now, this came out today as well, just literally an hour or two ago, from RBC, and that's the Royal Bank of Canada. And they just placed a $297 scientific target on the price of Tesla. And they kind of know what they're doing, but let's put the analysts aside for a second. Let's break down all the analysts and where we are. So this is the Tesla price targets from all the analysts as of today. You know, at the top of the list is Tasha Keeney from ARK Invest, all the way down to Gary Black from the Future Fund at the bottom. But if you average all these top analysts, you get an average price of $355.79. Of course, $792 is the top leaderboard from ARK Invest. Nobody in the professional analyst world has analyzed Tesla like ARK have. So kudos to ARK. Now let's look at the retail analysts. Here we see the very top is Alpha Quant. And we got people in there that we know and love as well. All the usual names, whole Mars catalog, Tesla Herbert. I think it's Herbert Ong. They call him Tesla Herbert. You name it. All the key players are there. Sasha's in there, etc. Their average price target is $499.54, just shy of $500. Interesting number. But the retail analysts are far higher than the Wall Street analysts. Why is that? Well, before we get into the rest of the story and what I uncovered, retail is, I believe, far smarter and far more knowledgeable than your average Wall Street. And Wall Street, their problem is they have to try and pigeonhole Tesla into an automotive play. And it's not, because the automotive analysts don't understand what Tesla is. They can't stick it in a utility play, and they can't stick it in an AI play. It's just, they're completely confused and lost. But retail, spend the time, the thousands of hours to understand exactly what this thing is made up of and where it's going. That's why I'd place a lot more credence on these targets than these targets. But either way, even just the analyst targets, we are way lower than we should be. So my theory, and before we get into all the other good stuff, and why they keep the stock price down. First of all, low stock prices help retain employees by offering them the opportunity to invest at lower prices, and vest sometimes over multi-year periods. That drives a lot of retention, loyalty, and incentivized to stay long term. Also, the people on the inside know where the company is going. It's also good to attract retail investors as well. And Tesla and Elon Musk, they love the retail investor. The retail investor has been with them through thick and thin, through even on the verge of bankruptcy when Elon Musk was sleeping on a factory floor. They never gave up. They never left. And Elon admires that loyalty. And he also doesn't admire Wall Street. He has disdain for Wall Street and the analysts and the shorts and all those guys and the hedge funds. And most importantly, Elon needs to negotiate a new comp plan. We all know that too. You don't want to negotiate a comp plan when the stock's at $400 or $600 for obvious reasons. You want it low and cheap. So perhaps there's some strategy behind this as well. Maybe they are trying to keep the lid on things. But let's look at a couple of other reasons too on how Tesla lets the mainstream media hammer them. All right? They have a PR team, but you could say they really have none. And Tesla has not invested in any public relations to address negative media coverage, inaccurate information about the company, and they allow misinformation and negative coverage to persist. Okay, fair enough. Then they don't address concerns about safety. Despite it being the safest car on the planet, they don't even bother. They don't care. It's as if they want people to throw mud at the company and they won't even bother washing it off. Also, very unconventional communication methods. Elon Musk's communication style, I personally think it's awesome, but some people find it erratic and controversial. I'd rather hear truth and be offended than know somebody is lying to me. And also, this has led to a lot of negative media coverage and has not helped combat criticism effectively. Also, lack of advertising. They're beginning to do a little bit of it now, but they don't really care. You know, these cars sell themselves, etc. Megapacks have multi-year waiting lists. CyberTruck, 7.2-year waiting list. And also there's other controversial actions that happen out there. Sometimes things are said, sometimes things are done. Who cares? But it does bother the traditional markets and Wall Street. Also, failure to address concerns about things like working conditions, failure to address environmental concerns. There's recent talk that there's too much poop in the water in Germany outside Giga Berlin. I mean, this is the most environmental company in the world, but some of the stuff is just ridiculous. But they don't care. They let it slide. It's as if they want to keep the lid on things. And there's a lot more too. There is no talk of accrued revenue. Approximate numbers here, but they have energy revenue that's unaccrued. They just, sometimes when you sell something, you can't actually realize the revenue until it's actually plugged in. But basically, it could be on the verge of being plugged in. They also have a lot of money in warranty services revenue because the cars are of such good quality. The reserves for the warranties are put to the side, but nothing ever happens to the car. I've got a 5-year-old X outside. Never had a problem. Never. Same tires. 50,000 miles. No problems. No warranties required. It's kind of madness. Anyway, these are monies that are sitting there and they could just be dumped onto earnings per share at any time, but they don't mention it, don't talk about it. Also, a little comment of mine earlier today, chatting in the community. There's no talk of size of Megapack and Autobidder business. Shout out to Søren Basher. Him and I had a great conversation on this. And I'll read this again. This is an analyst again from Royal Bank of Canada. And they believe Tesla's Megapack battery storage business could be worth substantially more than its standalone car business. Now, that's a big wake-up call because Elon's been saying that for years. When you look at the size of the global utility industry, it's 100x the size of the automotive industry. So that's obvious. But the key numbers here is it could yield 600 billion annual industry revenue, and they could get a huge market share, etc., etc., etc. Bringing it all down and how it's not even in the stock price. And that's kind of interesting. The work they're doing in places like Australia is completely mind-blowing, especially with Autobidder. They are now in a position, okay, to literally resell energy that they get on behalf of the utilities they work for. It's craziness. There's no talk of the fueling station domination, as I call it. They own the gas stations. And a shout out as well to Sanjay. It's also super smart. You've got everybody in there now. Rivian has just joined. You got General Motors, Volvo, Stellantis, Polestar, and they're opening up the charging network to everybody. But per top physician, it's also a super smart thing to do. It's like me sending my patients to another doctor to get a prescription. That is fatal for that doctor's image and sales to send his patient, his customer, to another physician. All right. All the other car companies are sending their cars to another gas station, energy station, fueling station, whatever you want to call it. It's madness. It's madness. The halo effect of this alone will be insane. In addition, there's no talk of their insurmountable AI advantage. Again, Apple, before they just shot their program, had 67 vehicles testing automated driving, 450,000 miles a year. And you got the Waymo data and all these other players, Zoox, etc. Tesla has over 5.5 million vehicles. All right. And they're doing over 50 billion miles a year. And they track everything and they see everything. Okay. This is an absolute insurmountable advantage. The edge cases that they can cover all over the world are insane. No other company is in a position to do that. And there's little talk, this is the odd video, but no real words as to what's going on. There's no talk of the bot potential. You've got companies now getting public funding in the multi-billion-dollar valuation. Of course, there's not a penny from the analysts on their price targets for Tesla. And Tesla have the most incredible expertise in AI and machine learning. They've been doing this from the get-go. Their expertise can be applied to everything, including robots, allowing them to navigate and interact with the environment more effectively. Their manufacturing capabilities are second to none, and they're about to get a whole lot better with Model 2, which apparently, rumor has it, the line is set for Model 2 and the design is locked in. Okay, they just surprised the world yesterday as well. We'll talk about that in a second. And their background in manufacturing, the way they unthink everything, best part is no part, etc. Best process is no process. They are so far ahead of everybody, it's scary. In addition, they integrate everything with existing products. They use SpaceX to make metal for cars. They use SpaceX to generate boosters for cars. Again, it's crazy. And their access to data is second to none. They have an integrated platform, integrated ERP, CRM, analytics, you name it, all in one platform. And they can configure demands for their vendors on the fly. Also, they have an extremely strong brand, etc. When they nail this spot, there will be no choice. It'll be Optimus or something crappy at a much higher price. That's just the way of the world. And then they launched this Roadster. Okay, for those Formula One fans out there, this thing will do 0 to 60 below 1 second. Because of SpaceX, there will be no other car like this. Bye-bye Lamborghini, Ferrari, Porsche, all these companies that think they have a monopoly on speed. No. And I guarantee you this Roadster will probably be 200k. A lot cheaper than any of these other cars. And it'll be a lot faster, a lot safer. And it'll drive itself. And it'll be faster than a Formula One car. So completely crazy. And if you think that's crazy, well, the CyberTruck is already faster than a Porsche. Towing a Porsche. The legacy sports car makers are toast. If, of course, Tesla can buy them enough. So let's get down to the nitty gritty as to the conclusion. Why is the stock price so low, considering all the value they have all the insurmountable leads? It's crazy. So let's get to my theory. Before, we're going to look at two charts. One is the ATR. We're only at level 3. This is a multi-year time frame model that looks at the macro situation of an asset and where we are. We're level 3 from 6 levels. And basically middle of the road. Considering we're in an AI revolution and this is the leading player in the space, why is it not back at all-time highs? It's crazy. But the good news for us is there's lots of upside. But we don't know why, or do we, why they're keeping the stock price depressed. Let's look at the LILO model, layer in, layer out model. And basically what this does is projects forward where the price could actually go. So level 7 is $403, level 8, $514, level 9, $626, and level 10 is $694. We know we're going to level 10, $694. The question is when. And as we saw recently, risk happens fast. Literally in 24 hours, Solana went up 30%. And we've seen what Bitcoin can do. We've seen what Nvidia does. This thing will pop. We just don't know when. But we do know that a lid has been kept on it. Now let's talk about the conclusion, part 1. First of all, I do believe Tesla's keeping stock low to retain employees, to give loyal retail investors like you and I an edge, and allow Elon to renegotiate his comp plan. Pretty clear. Also give the finger to Wall Street, whatever that means. I'm not quite sure. But yeah, he's not a fan of Wall Street. And part 2, literally, Tesla's strategy disrupts everything. Not just Wall Street stock management practices, but all traditional businesses. And few are able to place a value on what this thing is. Its remarkable success, its advantages over everybody else, its lead in terms of 7 to 10 years from everybody else. And they are setting new industry standards for everything, including cars and energy storage and Autobidder, which is an AI play, and the bot. And by thinking differently and bold actions, as I said, they're not going to be conventional. Tesla and Elon Musk will have their ChatGPT moment. So in the meantime, stack. As Alexandra Mertz said, I hope the price stays low so I can buy more. And she's all in on Tesla. So with that, everybody, hope you liked the video. Don't see this as bad or depressing. When you have an extraordinary company at a low price, you should be happy. That's my logic, at least. Could be flawed. Who am I? Just some crazy guy on the internet. Thank you all for coming. Thank you, TND Tesla and K8 and the mods in the chat. It's only a Tesla-only fans group here today. But there's nearly 3,000 of you. So hit the like on the way out, everybody. Thank you so much for coming. And I'll see you all tomorrow. No more videos from me today. Please. Bye.